PayPal reported earnings less than a week ago and it is down by over 10%. We're going to analyze PayPal and see, can the stock double by 2030 or is this something that we should skip? But before I get started, please like and subscribe and share this video with as many people as you can so this channel can grow. And with that being said, let's get started. These are PayPal's current metrics. For us to get a price target for 2030, we need to analyze and hypothesize what these figures can be by 2030. So let's get started with revenue. If you take a look at PayPal's revenue, it was making $17.7 billion 5 years ago to today making 31 billion. That is a almost 2x return. Not quite complete 2x, but very close to it. Right off the back, the one thing I noticed and why the stock hasn't had much momentum shift in its price movement, that it is predictable and it is a slow grower. Every quarter, PayPal will give you a guaranteed dollar amount of growth from the previous quarter, and it's about anywhere from a billion to 1.5 billion. Every quarter is manages to increase its revenue, but as the revenue gets bigger and bigger and bigger, the percentages start to slow down. 5 years ago, this was 17% of growth in its overall revenue. Today, it's still the same amount of growth in dollar figures, but now it's 4.28%. Now, my hypothesis is this is going to change and that PayPal will actually start to have a higher revenue percentage growth and a revenue increase overall in the near future because it is doing heavy integration with AI and is laser focus on profitability. So this gives me a very optimistic look that it can very well increase its growth rate from the current 4.28 that it is today. But from this, I have a general hypothesis what the revenue could be by 2030. Now with that hypothesis derived, I am going to go to ChatGPT and ask it what analysts project its revenue to be in the short term and what it can theorize it would be based off of historical projections and analyst input by 2030. So ChatGPT thinks it's going to grow its revenue consistently 4% a year for the next 5 years, which would give a grand total of $41 billion by 2030. When I look at this projection, it's very reasonable and it's going off historical trends, but it is decreasing the percentage at 4%. I don't like that too much. I think it can do better and it can go higher. So let's see what Gemini thinks. Gemini thinks 52, which would still be less than a 2x return, which checks out. It's even in the past 5 years, it wasn't able to do 2x return. So 52 billion, very reasonable, but I think it's a bit too high. So I really don't like that metric too much. DeepSeek is mirroring the same type of projections at 53 billion as Gemini. If I didn't like Gemini's numbers, I'm not gonna like DeepSeek's numbers either. They just don't correlate with the trends I observe and with the earnings call that I was listening to. And then we have Claude, which is saying 47.8 billion. That's a bit more reasonable, matches the trend and the general sentiment around PayPal. With all of those figures observed, I don't think it can hit 50. I'm gonna say 44 billion, which is an increase in revenue of 40% over the next 5 years. Next, we're gonna take a look at number of outstanding shares. Those have been decreasing at a whopping rate of almost 6% for the last 3 quarters and on an average of above 3% every quarter. 5 years ago, it had 1.18 billion in shares to today having 1.039 billion, which is a decrease of 12% on its number of outstanding shares. What that means that it was able to give you value as a shareholder versus what many other companies do, which they dilute you by printing more shares. So now all of a sudden the amount of shares that you owned became more valuable because less number of those shares are in the market trading. And not only that, last earnings call, PayPal announced a $15 billion stock buyback program, which means this is an additional 25% of value that they are going to return. Now, it is projected that all that might happen this year, but we're going to be a little bit conservative and say that will happen over the next 5 years instead. Next, we're going to take a look at PE. When PayPal started trading on the stock market, it had a PE of 32, and over time that kept going up all the way to 2020, where it reached a PE of 80. Now that its growth has slowed down and that its profitability is becoming more into focus, its PE has been going down at a consistent basis. Now it reached a rock bottom in the mid to low teens before climbing back up in the 20s. Today, it is back in the teens. So from this price movement, I'm going to be conservative. And the teens are too bearish. And the people aren't really understanding the value of the company. And eventually, people will understand the value of the company. And in my opinion, once that happens, it will reach a PE of 25. Profit margin is nothing short of disgusting. Now, this is a platform company which are highly profitable and they have margins of up to 30, 40, even 50. But you do have to understand, poor management was one of the biggest reasons why its profit margin started to decline so much. Now, recently, they have hired a new CEO. And he is slowly but surely turning things around. He has a long-term vision, and a lot of the segments that aren't profitable, he is making sure that they do become profitable, even at the cost of letting growth disappear, because who wants to give anything out for free? I am liking this approach. I think its profit margin can reach 25%, because at the end, I keep reiterating this, but it's a platform company. It literally provides a platform and it has to do very little capex spending to maintain that platform. As long as the users are happy, it's gonna make money. So 25% I feel like is being a bit bearish, but I don't want to give insane numbers, especially the fact that its previous history doesn't support such a high profit margin. After we plug in all these numbers, we get a price of $357, which is a 4x return from today's $77. Now, we have to, if you were to invest that same money into the S&P 500, you would get almost $116 by 2030. In my opinion, this is a risk worth taking. I mean, the potential to make a 4x return over the S&P 500 makes me very excited. Now, I want to emphasize it has to hit all these metrics, meaning it has to hit 44 billion in revenue. It has to reach profit margin of 25%. If it can do those things, and it looks like it's on the path of doing them, it's going to have a stock price of $357. After doing this analysis, I ended up buying $10,000 worth of PayPal stocks myself. Now, this is a company that I'm very excited for. One of its most profitable arms, aka Venmo, is still growing, and they're adding ads to Venmo. You're gonna start seeing ads in Venmo to generate even more revenue, and it's getting rid of a lot of bad contracts with payment processing that weren't that profitable to focus on profitability. Yes, short term they will lose market share in those segments, but they're gonna make profit. They haven't made a profit in those segments for a while. Now they're gonna make profit. Overall, I think this stock is an absolute buy, but you do your own analysis and come up with your own thesis on whether to buy or skip the stock. Don't just follow my recommendation. Use this as a guide to help you make a good investment decision. And with that being said, please like, follow, and if you want to support me further, you can always check out my Patreons. I post these videos 3 to 4 days early on that channel, and I do a few exclusives there. With that being said, I'll catch you guys in the next one. Peace.